Hello everyone, this is Kelly. Welcome back to CUMIC Weekly, where we bring you the latest Chinese steel prices and market trends every single week. If you're new here, simply hit the subscribe and like button right here to miss out on any future updates. This week, China's domestic steel prices continue to move a bit higher, and export prices finally stopped falling. Steel futures climbed close to their highest in nearly 4 weeks. So, what is driving the rebound? First, concerns about raw material supply have been building up. China Mineral Resources Group restricted certain FMG iron ore products, while BHP staff in Port Hedland, Australia, were preparing for possible strike action. Together, these developments raised concerns about potential disruptions to iron ore supply. As a result, its prices remained strong and continued to provide cost support for the steel market. At the same time, coking coal supply remained tight. Therefore, although steel demand is still not particularly strong, higher raw material prices are making it unlikely for steel prices to fall sharply. Meanwhile, steel mills are facing continued pressure on their profit margins. With profits being squeezed, more mills have scheduled maintenance or reduced production. This is helping ease supply pressure on the market. On the policy front, China's economic data for June came in weaker than expected. So the market is expecting possible policy stimulus in late July and also during the second half of the year to support economic growth. Next, let's examine the supply and demand numbers. This week, apparent demand went up by 75,000 tons. Inventory went down by 178,000 tons, and production went down a bit. At first glance, the increase in demand may look encouraging. However, the overall improvement in end-user demand was still limited. The more important change came from the supply side. As more steel mills carried out maintenance and production cuts, steel output continued to decline. This also helped bring total inventories down and reduced some of the pressure caused by oversupply. Overall, the short-term outlook remains positive. Strong raw material cost and expectations of further production cuts may continue to support the current rebound. That said, the market is still facing a major challenge: weak demand during the traditional off-season. This will likely limit how far prices can rise. Looking ahead to next week, Chinese steel prices are expected to remain volatile but with a slight upward trend. Well, what's your take on the Chinese steel market? If you enjoyed this video, don't forget to subscribe to our channel and give us a thumbs up. Just hit the subscribe and like button right here. See you next week. Bye bye.